Good morning, everyone. Mike and Corey here today. Exciting news, not necessarily great news, but at least exciting. Uh, you know, Actually, the economy shrunk a little bit. The GDP went down, which is halfway to a recession, which I'll explain in a moment. Other things, earnings came out yesterday. Starbucks, Visa, Booking, several other ones. So we're going to cover those topics today. This is a financial education presentation. You must do your own due diligence on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So, on yesterday's show, I mentioned that Starbucks is one of the, keep your finger on the pulse of the economy and the consumer. And Starbucks disappointed on sales and earnings. Keep in mind they hired a brand new CEO they took from Chipotle last year, Brian Nicole. The stock surged up when they hired him. This is it. Chipotle's been growing. He's going to do the same thing with Starbucks. Unfortunately, it's not that easy to turn things around. Not that Starbucks is, falling apart, but they're not growing as fast as they used to be. Starbucks basically prints money. I mean, I don't know. I don't buy a lot of Starbucks except for some of my kids. But you pay $5 or $6 for that drink that has, I don't know, 30 cents of ingredients in it. So there's like dollar bills coming out of the other side of the cup because it's printing money. So they can't grow those stores kind of fast enough. And people, you know, uh, confession, I ran my daughter through Starbucks this morning. I just let her run in, and she's like, "Sorry, it took so long. I had to stand in line. There was 10 people in front of me." Wow, that says printing money like anything I've ever heard before. But anyways, they did not meet what they expected to do for the same store sales. So their stock sold off. It's off almost 8%. Got the graph up here. You can see like since the beginning of the year, it's down, I mean, a great chunk. This is where things start to look more like a buy to me on a Starbucks. I mean, I like this company. I always thought it was expensive. When they hired that new CEO and it was up over $90 a share, I thought, good company, good CEO, a lot of things, good moat around their brand. But it was too expensive. I'll be honest, this is the time I start looking at this one. So we'll see. Maybe this will enter our models at some point. So, finger on the pulse of the consumer. You know what really has their finger on the pulse of the consumer? The Fed and the GDP. And the GDP, gross domestic product, fell 0.3%. So that means our economy shrunk in the first quarter. What caused this? A lot of it has to do with uncertainty around tariffs. Nobody was expecting the economy to shrink this fast. I mean, we knew it was slowing, but no one thought it was going to go down. I mean, we started hearing whispers of it. And in previous shows, I said we may be in a recession. So I thought I would show the definition of a recession. I'll just show it real briefly, but it's 2 consecutive quarters of negative gross domestic product. So we're halfway there. So back to this other one, it went down 0.3%. So there's 1 quarter of shrinkage. If this next quarter, which we won't know these numbers until July, if it shrinks, officially that's a recession. 2 quarters down. I think it's very interesting because it's 0.3%, so it's barely down. What if it had been up 0.1%? Well, then we wouldn't be halfway there. So what does this mean? Well, the stock market's off a couple percent today. That's not a lot. I think the markets had kind of priced this in, that they knew this was a danger or a concern. On the other side, call this, I don't know why I hate to say this is good, but it is. But if you want the Fed to reduce the discount rate, you want them to reduce rates, they can't have concern of inflation. And if the economy is shrinking, there's less chance of inflation. So that means there's a better chance that money's going to get cheaper. I know Trump has been pressuring Powell to reduce those rates. And so far, Powell said, no, 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 no way. We'll look at it. We'll look at tariffs. Tariffs starting to get pulled back a little bit. economy shrinks, the chance of discount rate going down is getting better. So it's kind of like the bad news is good news kind of thing. So anyways, with that, I know Corey's got a slide he's going to show on quarter over quarter GDP, and you can see the drop. So you can see the previous 5 quarters was all 1.5 to 3%, and then this quarter is down the negative 0.3. So yeah, it is what it is. It's kind of like, as consumers and as business owners, I think we feel the economy's been slowing. If you've been in the job market, you can feel the economy slowing, and this just is the official stamp of yes, it is officially slowing. In fact, shrinking. So, what do you think about that, Corey? Was it a surprise?
If you look at expectations, it was a surprise. They do mention in that article that there was a surge of imports related to the tariff uncertainty, people trying to get out ahead of things, and imports subtract from GDP. So it's a little hard to read fully into this, because it's like, okay, well, we know there was some pull forward of imports, but how much, right? And so it'll take a couple quarters to really see sort of the ripples of all these tariff decisions.
And the good news is the stock market looks ahead. The stock market is looking ahead 6 months, 12 months. So that's why I'm saying if it was a total shock, like, oh my gosh, we're right in the middle of a horrible recession, I mean, the market would sell off a lot more than it has so far. And keep in mind, we're coming off of 6 straight green days. So even though the market's off a little bit today, it's higher than it was a week ago. So go ahead. You can take us into what you're hearing on some of the earnings.
Yeah, and I do have some good news coming. Just one thing before that, I thought these were interesting comments from Satya Nadella this morning. And I think he was sitting across from Mark Zuckerberg. They were talking about AI and talking about coding and some of their workplace productivity stuff. But Satya Nadella mentioned that as much as 30% of the company's code is now written by artificial intelligence. So then one of the thoughts that comes out of a comment like this is, okay, well, when does the workforce start to shrink as a result of this productivity? And also, if we add on to that, when do we kind of start to need less lawyers, and when do we actually start to need less clerical jobs creating some sort of routine type of documents and things like that? So part of this is good. It's exciting. I mean, it's totally inevitable that AI is going to be increasing productivity and reducing workforce need. But how fast and can new jobs be created fast enough to replace the old jobs that'll be left behind? It's going to be really interesting, Mike, this next 10 years.
Yeah, as a person who took programming classes in the way back in the 80s and 90s, in coding, it's like 30% of code is written by AI. I will say that if you're a pure programmer, you're like, oh, I don't know if I like to hear this. But really what it's doing is augmenting the power of the programmer to use AI to write more code. Plus, there's always the business analyst, people that sit between. Somebody has to understand what the code needs to do. So I mean, there will be a job shifting, probably more towards the business side from the IT.
Did you ever have a job that you look back on and think, oh, that could have definitely been replaced by AI? Just going all the way back to high school or whatever. Any job you can think of?
Definitely. I had a job where I worked on a call center, and in fact, it got replaced. So what happened is, I dealt with managers from stores and shifting inventory from place to place. Took 15, 16 calls an hour to do all this, and hours and hours. And they put in an automated call center so the manager could type what they need, and then the computer did it. And I went from taking 15 calls an hour to 1 call an hour. and that only lasted for a few months, of course. I had best grades I ever had in college because I could sit and do my schoolwork while I was sitting there. And then I know that I took an internship, but they shut the whole department down. So guess what?
Wow.
I mean, I was only taking one call an hour, so like, yeah, totally. So yeah, I mean, we see that, more efficiency.
There's going to be more and more and more of that kind of stuff. All right, on to the good news. So Visa earnings, and then we're going to look at Booking Holdings earnings. And I do have a graphic showing you all of Booking Holdings properties, their intellectual properties, just so if you're not familiar with what they own. So Visa had good earnings, business as usual, and that's kind of run-of-the-mill stuff for Visa, high quality, high moat business, all of that. I do have one comment I wanted to highlight on the consumer here. And this is from the CEO. Consumer spending remained resilient even with macroeconomic uncertainty. Okay, good. That's absolutely what the market wants to hear. Here's another comment from the conference call. Halfway through our fiscal year, consumer spending has been resilient and strong, but there's much uncertainty. Focusing on the United States in Q2 and through April 21st, okay, so that's up to last week, we have not seen any signs of overall consumer spending weakening. Wow. While spending growth differs among consumer spend bands, with the most affluent growing the fastest, all spend bands, that's like all income levels of consumers, remain resilient and consistent with past quarters. So does it get better than that, Mike?
That sounds very positive.
Very positive. Very positive. On to Booking Holdings. And Joseph Carlson, he's a big advocate for this company, he loves the business model and so on. And I've learned a lot about the business from him. So, I figured I'd highlight his take and his AI overview for Booking Holdings. And if you're not familiar with what Booking Holdings owns, Booking.com, Kayak, I've used a few of those. Have you ever, Mike?
I've used Kayak, OpenTable, Priceline. I've used all three of those. I've always rented my cars through Kayak, but I see they also have rentalcars.com.
Wow. Okay, so here's what they had to say on travel demand. I don't know if you've heard, there's some stuff out there, Mike, how travel demand, or particularly travel demand to the United States, might be weakening. Let's see. They say global leisure travel demand remains stable at the start of Q2. And then here's some more. Global leisure travel demand remains stable despite the geopolitical and macroeconomic uncertainties. And I guess I'll stop there, but let's see. Down at the bottom, U.S. specific indicators, shorter lengths of stay and split economy trends, higher star hotels more resilient than lower star hotels, suggesting cautious consumer spending. These patterns are not observed in Europe. Okay, so maybe a tiny hint of cautious, on the lower end consumer side, but certainly nothing scary.
Well, that's good news. I mean, obviously the consumer drives, I can't remember if it's 60 to 70%, somewhere in that range of the economy spend. It's not government. So that drives a chunk of it. So consumer spending up. The only thing that makes me nervous when you talk about Visa and it crosses all bands is, you still got to be responsible spending. I mean, just because my credit card limit says whatever it is doesn't mean I should spend my credit card limit. I want to have that money to pay off that credit card. So, it could be short-lived. It'll be very interesting to see how this next quarter goes. I know Trump is going to be, I'm sure this isn't exactly the news that he wanted to hear. I'm sure he, didn't want to hear the economy shrank, even though it's impacted by imports. But, maybe that means the tariff pressure gets reduced a little bit. So with that, I know we have big earnings out tonight. What are the two companies? I forgot. I mean, off the top of my head, is it Microsoft and Meta today? I believe.
It's Microsoft, Meta, Qualcomm. Yep.
Well, Microsoft and Meta, two of the Mag 7, and then two more again tomorrow. So we'll see what comes out with those companies. I know those are the things that I look after hours, like what happens at 4:30. Let's see what these companies do, because we definitely hold them in our models, and they are really important. So with that, we will talk to you tomorrow. Bye.